So Michelle's timer did not start. Can you just check?
So we are live now. We'll start.
Okay.
I hope you can see my screen now.
Yeah.
Okay. Good afternoon, ladies and gentlemen, and welcome to the earnings conference call for Q4 and FY26 for Markolines Pavement Technologies Limited. Today on the call from the management team, we have with us Mr. Vijay Oswal, founder and chief financial officer. Mr. Vijay Oswal has over 3 decades of experience across infrastructure, finance, manufacturing, and international business. He has been one of the guiding forces behind Markolines' growth through his sharp business acumen and strategic planning. Also joining us today is Mr. Rakesh Verma, finance head. As a disclaimer, I would like to inform all the participants that this call may contain forward looking statements which may involve risks and uncertainties. At this moment, all participants are in the listen only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. I would now like to request Mr. Vijay Oswal, founder and chief financial officer, to run us through the presentation for the quarter and full year ended 31st March 2026 and the growth plan and vision for the upcoming year. Over to you, sir.
Thank you, Michelle. Good afternoon, guys. Thank you very much for being here on our earning call to listen to us and to know more about what we do. We're, here we go. So, Markolines, we are here to happy to present you. We as Markolines as India's road doctor, wherein we've been building better roads through the life cycle maintenances. And I'm happy to take you through the Q4 presentation as well as the FY 25-26. Next. So just to give you all those who are listening for the first time, to give you a company overview, the company's full name is Markolines Pavement Technologies Limited. We were founded in 2002 and having our headquarters at Navi Mumbai. Mr. Sanjay Patil, who is our chairman, managing director, and myself, we both operate the company on a daily basis. We are listed on the NSE as well as BSE main board. Total employee strength is about 322 with a market cap about 350 crore rupees. As far as our work goes, we are into the highway operation and maintenances, wherein we have done a major maintenance of more than 5,500 lane kilometers. We are exclusive experiences of 197 kilometers of road recycling that we call as CIPR. As of 31st March, we had an huge order book, unexecuted order book of 600 crores, and we operate pan India. Next. Just quick recap of the financials. As far as FY26 has gone, we have given a good growth, though because of the West Asia crisis, our performance was a little bit, but we could manage to give you a better result. So as far as revenues are concerned, we have grown from 307 to 350 crore, approximately 348.49 crore. On a profitability EBITDA, we have given EBITDA of 48.54 crore, which is about more over last year. And as far as PAT is concerned, we've given a PAT of about 26.23 crores, which is approximately 15% more over the last year. And this has definitely given a growth in the EPS from 10.16 to 11.90 rupees, which is a 17% growth over last year. Next. Next. So these are the profit and loss statements for which I have taken you through the summary and a graphical presentation. Now, if I have to just tell you about the growth over last few years, as far as revenue is concerned, we are growing at a 17% CAGR, and at EBITDA, we are growing at a 21% CAGR. On a PAT level, if we look at, we have been growing at 27% CAGR over the last 5 years, right from FY22 to FY26. Next. As far as this final quarter goes, the first 3 quarters have already been published. As usual, we have done the maximum turnover in particularly the Q4. Q4 has been always been giving us the highest volume in terms of revenue as well as the profitability, which adds to our balance sheet. So in Q4, we have done a turnover of about 105 crore rupees of revenue, and giving a PAT margin of about 10.81%, which is generally higher in the Q4, and EBITDA of about 18%, which is definitely compared to the last year's Q3, we have grown about 13% quarter on quarter. And if I look on year, then it is also similar kind of a growth. Next. These are the balance sheet figures reflecting from our P&L consolidated of the financial year 25-26. There are a lot of details available here. You can refer. This presentation is uploaded on the website, and you all can refer to all the details on our official website as well as the BSE or NSE. So this shows an overall balance sheet wherein our overall the company's equities and liabilities. Equities, which we consider it is about 202 crore rupees, and liabilities of about short-term liabilities. If I had to 1 second, let me just end. Yeah. So liabilities of about total 126 crore. So these are the things. And as far as the assets are concerned, we have an asset block of about close to 30 crore rupees. That is into the capital investment or the equipments. We own about 3 pavers, 3 plants, and few other machineries, and other details which are available on the website. Next. So now just to take you through our business, what it is. Now India's road story, there is a strategic shift from where we were and where we are heading. The last decade was into the rapid expansion, and then strong government support, growth in new greenfield highways. And then as this network is maturing, we will have the next decade where we will have a requirement to rehabilitate and maintain this. So because of the privatization, focus on the life cycle maintenance and my optimization is very high. And this definitely posts us into a very advantageous position, because we are already into the business where we are into the lifestyle extension. We are already technology led and driven. We do a lot of things which are into the technological maintenance. We have done and introduced so many things for the first time in Indian road history, such as microsurfacing with plastic, then the CIPR. Now, if I to look at what is it that we are heading through, so maintenance is needed regularly because of the wear and tear nature of the roads. So the growing road network is definitely driving a higher O&M demand, and institutional asset owners, because there are a lot of privatization which has happened, their focus is on to increasing the life cycle performance. Now, there is a structural tailwind also to entire this industry because of the increasing asset base, growing private institutions and their contribution or percentage holding in terms of the road network, and rising adoption of advanced maintenance technologies. So the Markolines advantage is basically we are a specialized maintenance capabilities. Then we are already providing the integrated service offerings. We have a proven track record with a strong relationship with every client, every international fund who in the market is on our client list, and basically we have the established credentials and credibility into the market. So this is where the Markolines is positioned and advantage. Go next. So now what is there lies is the next big opportunity. Now, as I have already said, that maintenance is mandatory because of the wear and tear nature. Every 5 to 7 years, the highway has to undergo an overall maintenance, which we call as major maintenances. Up till now, we have been, building the roads. Now they are maturing. They are the coming for the maintenances. And if we compare ourselves with the global scenario, on an average, our maintenance as of now is to the tune of 15% of the road cost, whereas wherein the if we compare this to the global scenario, which is 40% of the cost, and this is where we are also with the all private institutions, funds already owning the assets, then the public demand, we are also moving slowly towards more preservation and prevention of the road quality, maintaining them to the optimal level wherein we get a very good riding quality. Now, this is where we are, and as it is, India has now, up till my last presentation, I used to say we are the second largest network, but today we are the number one highway network in the world with about 606.7 million kilometer road length. And obviously, over the last few years, there has been a huge boost in the infrastructure segment. We used to build 20 kilometers per day road in 2014 when Modi regime started, and now we are building about 35 kilometers per day. And all this newly built road will come for the maintenance subsequently as it matures. Next. Recently, you all must have seen that there was a news wherein the sovereign and international funds have been allowed to participate in PPP highway projects. Now, what does this mean? Basically, until now, the funds or the international players were already there, but they were not eligible to participate in the road construction. Now, recently, government has allowed them to participate into the at a construction phase also. Earlier, they used to take over the project only once it was completed and committed. This thing. Because of this, definitely we will have a more fund availability for growth, and obviously the their outlook towards the road construction as well as maintenance is that how they can have a larger life cycle with the good quality. And with this, the potential for us is also growing, and definitely within international players coming in, the sophisticated and O&M partners or the trusted O&M partners will be the need of the time, wherein we as Markolines, leaders in the market, the only listed company, are at a definitely advantageous position. Next. So now we are happy to present ourselves as an India's road doctor, because that is what we have been doing over the years. We are the pioneers in various technologies, and now we are happy to say that we are leaders too. What we typically adopt the methodologies, we diagnose. We generally do not just go by the BOQs, but it is a regular practice for us, wherein we provide the comprehensive solutions where we diagnose the roads, understand the customer's problem, devise a tailor-made solution which is future-proof, and deliver it to the client. That is where we have made our credentials and credibility into the market, because today we are the leaders in highway O&M. We are the only company, and all the funds who have come to India, we are their preferred partner into the highway O&M. Now, we are expertise into specialized maintenances. We are already the technology driven, lot of things we have brought into India, trusted by the institutions with a pan-India presence. Next. As far as our business vertical goes, we have divided our business lines into three verticals. One is highway maintenance, wherein we do the preventive maintenance, then the major maintenance. Preventive maintenance generally to increase the life cycle. Major maintenance is something which is mandatory by law because of the wear and tear nature. You need to overhaul the complete road length every 5 to 7 years. And of course, with the new concrete roads coming in, we also do the rigid pavement maintenances. Then under specialized maintenances, as I have said, we do microsurfacing, cold in place recycling. Microsurfacing, for a layman's language, is basically a lamination of road by wherein the road, the water seepage is avoided and the life of the road is increased. And CIPR is a technology wherein it is the old bad road is recycled and relaid by a train of equipments, and completely new road is laid once the train of equipment passes. Then a few years back, we have also started with the specialized construction. That is, we started with soil stabilization and FDR. Then subsequently, we have entered into the tunneling and bridges. And also now we are developing into the other infrastructures like schools and sports infrastructure development we have got into. Next. Now, on a corporate side, we have recently announced and already completed the filing with the exchange for the merger of Markolines Pavement and Markolines Infra. Now, Markolines Infra is basically providing the complete suite of uh, highway operations, wherein Markolines Infra, we operate about 60 work orders coming out of about 30 projects. That also includes managing the 28 toll projects. Now, basically, integrated strength, what all will offer it? Basically, then we will be the only company providing the complete spectrum of services across the O&M, the only highway O&M platform. Then obviously, because of the merger, we will have the expanded operational and executional capacities, better bidding eligibility because of the size, consolidation, and the data, ready data available to us by virtue of operation of that highways. This will also give us the revenues scale up, because today we are doing 350. But if I have to tell you, just both companies put together, we are today 500. If merged, we would be 500 plus crores. And this will also enhance the operational synergies and the efficiencies. Now, as far as growth trajectory is concerned, we have already said that we are on the path to become an 1,000 crore company very soon. And to support that, as of today, when we are talking, because of our uh, growing credentials, now we are eligible for the higher bid capacity. We on our own now are eligible to bid up to the 500 crore rupees of project. And because of that, we are now working with on lot of major projects wherein we could be part of the specialized construction or the maintenance project. And that, because of that, we are today have an active pipeline of about 2,000 plus crore rupees of the work. Now, as far as March is concerned, I have already taken you through that we have done a 350 crore rupees in payment and or 150 crore rupees in infra. And we are present across India, and this merger will definitely help us in further consolidating our performance. Next. So now, as far as the management is concerned, now how do we look at all this business in terms of actual operations, mergers, and everything? Now, basically, this will also give us our, on a financial side, if I have to tell you, the balance sheet is, remains very disciplined and prudent in capital allocation. Despite of, as I said, economic disturbances, the business continues and operates in a very steady format, because we took an really what do you say, the preventive or the care wherein we could ensure the results and not having much of an effect of onto the our bottom lines. Then business mix also, because of the merger, this will give us a very balanced business mix wherein MIL will further strengthen our cash flows, because that is the business wherein the monthly revenues and on regular assured business is coming in. And it, as Markolines, we also have the enough or the adequate fund base as well as non-fund base limits available, wherein giving us more headroom for bidding for the higher value projects. As I said, as of now, we have close to 600 crore rupees of an unexecuted order book within 2000 crore rupees of a pipeline. Now, as far as on the business side, the number of highway assets are really increasing. Government has also launched various InvITs and similar programs and has been receiving very strong and encouraging success. Globally, infrastructure asset management has crossed the trillions of dollars, and we are seeing and following the same trend. Probably approximately as of today, we are uh, close to 30% privatization, and government is looking at more and more monetization out of these by selling the assets either to the international funds or putting them into the InvITs. And definitely this will also open up a long-term opportunities for us as Markolines in the O&M business in a major way. Now, as far as I have already said, merger benefits MPTL, how basically it will definitely enable MPTL to offer the seamless lifecycle services across the maintenance and operations also. Cost saving and better financial management, obviously because of the operational efficiencies and cost optimization, we would have a definitely stronger financial management practices. And uh, of course, what put together will give us a more stronger balance sheet. Next. Now, with a pan-India presence, what is it that we have different than our competition? One, we are basically going to be an integrated highways lifecycle platform, providing the complete end-to-end services to all the highway asset owners. We have a very strong track record, having been there into the market for last 23 years now, proven credentials, long-term client relationships, and with a pan-India presence. You can see our presence across India in terms of maintenances. And as I said, how we differentiate in terms of competitive advantage is basically we are not the people who just provide one or two services. We are the only company providing the complete array of services. And secondly, our approach, as I said, is always like a doctor, wherein we would understand client's problem, give them a comprehensive solution, may or may not be of their thought process, but it give a comprehensive solution where their problems will be addressed, giving them a cost effective and long term solutions of highway operation and maintenance. Next. If you see our client list today, all the funds, major assets owners, and the government agencies, they are on our client list. The first line will represent most of the InvITs and the international funds. Second is all the government national agencies, corporations, and the other as private asset owners. Now, this is where we are trusted by the complete India's highway ecosystem, because we are there for the asset owners to resolve every issue that they would have in terms of operation and maintenance of the highways that are being built in India. Next. So that's all was the this thing from the Markoline side. As we always say that our tagline says that we are paving the path towards innovative tomorrow by way of the technology and doing the maintenance, being there for people, giving you the better riding quality. Now, and what we see is a healthy growth visibility and scalable long-term opportunity. This is what we are, and we see a very good opportunity and growth prospect hereafter. So this is all from the Markolines side. Now Michelle, we can open up for the Q&A session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. The operator will announce your name when it is your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your questions. You may also post your text questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please click on the Q&A tab on the panel and click on the Raise Hand button. You may also post your text questions.
So, Michelle, I see few people there in the queue on the Q&A section. Can you just refer
Yes,
to
sir.
that? Yeah.
Sure, sir. First question is from Nishita Jain from Sapphire Capital. Please go ahead.
Hello,
Yeah, hello.
am I audible?
Yes, you are. Please go ahead.
Yeah, I had a few questions. So one would be on what is the update on the merger? Where are we? Like in FY27, will both the companies' books be integrated? Are the books going to be integrated? Will
Yeah.
the merger process be completed by FY27? If so, then when? Which quarter can we see the merger happening?
Okay. As far as we are concerned, we have filed our merger applications and we have submitted and the all the queries answers to the all the queries in the month of March only. Few of them have been answered recently too, and there are no further queries as of now pending to be resolved. So if I look at the overall merger scenarios and case studies, then I expect that generally it takes about 6 months. So we are definitely expecting that by FY27 completion, we should be a merged entity, and we are expecting on an average about 6 months.
Okay, understood. So, you mentioned that we did 150 crore of top line in Markoline Infra in FY26. What are the EBITDA margins that we see there?
So,
And on a consolidated level in FY27, what margins can we see in the merged company, merged entity?
okay. So as far as infra is concerned, we are just going through the final audit. So post that, within a week's time, we will be releasing the result also. But as far as infra is concerned, let me just tell you that it is the on a profitability percentage, it is definitely higher than the payment. Purely being into the services, we draw generally approximately 9 to 10% of PAT margins.
Okay, understood. And my next question would be on
Can you be a
what
little louder?
capex? Yes, am I audible now?
Yeah.
Yeah. So, I wanted to know what capex are we looking forward to do in FY27, and if we've done any capex in FY26.
So as far as FY26 is concerned, we did not do any major capex, but generally our capex is defined and driven by the client needs. So we are definitely looking at introducing one more a few pavers and maybe a one HMP, close to about a 10 crore rupees of a capex this year.
Okay,
And
understood.
as far as
And
capex is concerned, just let me give you one answer that will be helpful. That in an industry to keep the optimum efficiency, generally we have to keep churning the our plants on a regular basis. So approximately every 3 to 4 years, we keep churning our mm, the equipments. Yeah,
Okay,
go ahead.
3 to 4 years, you said.
Yeah.
Okay, okay, understood. And like you mentioned that we have a strong active order pipeline of 2,000 crores. What is our win ratio generally?
So when I'm saying active pipeline, of course the potential is too high. But when I'm saying active, we are expecting approximately up till now. When we say they're active, we have been winning at least 50% of the orders that we target for.
Okay, so like by the end of FY 27, what can be our closing order book that you anticipate?
So see, if you look at our performances, generally by and large, we have been always maintaining an order book which is at least what you know sufficient for us 1 to 2 years or averagely 18 months. And we expect the same trend to maintain so that we have a clear visibility with a target to achieve on a higher side. Uh, we are expecting that we should have at least 1,000 crore order book.
Okay, okay, understood. And my last question would be on if you could give some kind of guidance on profitability, like EBITDA margin and revenue growth in FY 27, that would be really helpful.
So basically, this is the year, as I said, that now with our specialized construction program on the last phase, wherein which has given us a larger eligibility. So as I said, since the project which we are running, tunnel project in Maharashtra, is about the completion, which has given us a very good equity of 500 crores on our own. And because of that, we are working on various things. Though, I cannot stock anything in terms of this thing, but we are expecting a very good growth this year to the tune of at least 30%.
And this is included the Markolines Infra
So sorry,
company, right?
can you just be a
Is
little
the
louder?
Yes, is this 30% on a standalone basis or
Yes, standalone
including the
basis.
Markline
Standalone
Infra?
basis. Standalone basis.
Okay, okay. And
So the
margin we will.
Markolines infra will give us whatever I'm talking now is purely from the MPTL perspective. The Markolines merger of an infra into pavement will definitely gives an additional revenue, because otherwise also we
Okay,
are close to about 45% of the MPTL in infra.
okay, understood. And on the margin front, like it's almost 1% down compared to FY 25. So what are the sustainable margins, EBITDA margins that we can see going forward?
Okay. So as far as EBITDAs are concerned, generally what, being a service provider, what we do is our EBITDAs are subjective because of the client's need. If my clients ask me to invest in the CapEx, which is transferred, all expenditures is transferred or the to the clients while when we are working the costing. So EBITDA vary. As a service provider, what we look at is generally we maintain our bottom line. So our PBTs and PATs, if you look at, they are generally consistent.
Okay, so they'll remain consistent at around 7%. Is that
Yeah,
uh,
between 7 and yeah, yeah, very true.
okay, okay, understood. Thank you so much for answering all the questions.
Most welcome.
Reminder to all the participants to please click on the raise hand option to ask questions at this time. You may also post your text questions.
Michelle, I see some text questions there. You can take
Sure,
up one
sir.
by one. Yeah,
Sure. Sir, I'll be reading out the questions for you and you may
sure.
proceed
Thank
with
you
the
very much.
answers. Thank you. We'll take the text question from Pranay Shah from Caron Capital. And the question is, Can you give a breakup of order book and how revenue booking happens when you say your target 100 crore closing order book by FY27? Does it include Marcoline Infra as well as in this? What has led to decline in other expenses in Q4?
Okay. So there are too many questions in this. I will take up one by one. Now, as far as order breakup this is concerned, uh, it is a mix of the order book of the. See, basically, our business is divided into two categories. One is the maintenance and one is the specialized construction. Specialized construction orders, they will be volume will be higher, but they will extend over 2 or 3 years. Whereas the maintenance orders will be to the tune of 40 to let's say 100 crores, and they will be all consumed over a period of maximum 18 months. Our generally order book is a mix of both. As of now, if I have to tell you, approximately we will have in about 50-50 or 45-55 breakup in terms of maintenance versus construction orders. Now, your second question is that does this include infra? No, I am not including the Markolines infra. That will be add-on. As far as Markolines infra is concerned, generally they are the recurring type of nature in nature, because those are the monthly maintenances and services that we provide. Just to give you a ballpark figure, we are as of now today, we are doing a monthly billing of close to about between 14 to 15 crore per month in Markolines infra. And as far as your last question is a decline in other expenses, uh, generally you have to see, as I already said, that because of the accounting practices, we have to always see other expenses and the material consumption together. Because if we do an outsourcing, then the expenditure of are booked in different head, so they would vary. But if you look at, by and large, our margins would be similar. As I said, that since we work very transparently with our clients, we open our spreadsheets, discuss with them, and generally we work on the cost plus basis, and that's what ensures our margin or the bottom line.
Thank you, sir. We'll take
Yeah.
the next question from Yash Nassar, an individual investor. And the question is, what were the key factors that led to the strong 62% QOQ growth in PAT during Q4 FY26?
Okay. So generally in infrastructure industry is subject to, basically it's cyclic in nature because of the monsoon or the, we can say, environmental conditions. So we generally have a slower Q1s and Q2s, and our business ramp up in Q3 and Q4. Obviously, that would provide us the higher this thing, because the at the year end, because of the financial closures, we also try all the other smaller aspects, billing, that everything happens in the month of March, giving us a better visibility in terms of the PAT growth.
Thank you, sir. A reminder to all the participants, please click on the raise hand option. You may also post your text questions. We'll take the next question from Shrisha Rudrani, an individual investor. And the question is, the company has indicated an ambition to nearly triple its revenue. By when do you expect to achieve this milestone? And the next question is, out of the current order book of over 600 crores, how much revenue is expected to be executed during FY27?
Okay. So now 1,000 crore mark, in my earlier communication also I had said that we are looking at 3 years timeline to achieve that. And we are, as I said, with the increasing size eligibility, we will definitely put in our best efforts to prepone that as much as possible. Now, as far as the revenue out of 600 crores, as I said, our revenue definitely it will go with the order book. But out of this order book, the 50% order book is coming from the specialized construction, so which will be spread over few years, and 50% will be executed in this year. But that does not limit us, because the maintenance orders are something which are we keep working on an everyday basis. And generally the major maintenance would start. So the monsoon is the period when the negotiations would happen. The orders will be all the BOQs or the inquiries will be so that they are closed at the end of the monsoon and work begins. So there are a lot more things that we are looking at in terms of maintenance orders.
Thank you, sir. The next question is from Rahul Singh, an individual investor, and the question is: could you provide more details on the rupees 2000 plus crore project pipeline and the visibility of converting these opportunities into orders? Do you want me to read the next question as well, sir?
No, I will take one by one. I can also see,
Okay,
because there are
sure, sir.
3, 4 questions. So as far as which actually I have answered this question, but let me just elaborate on this. As I said, our eligibility has increased to 500 crores on an individual basis. So as of now, we are working on at least 4 to 5 projects ranging from 300 to 500 crore rupees. That gives us an consolidated pipeline of 200 crore rupees of work that we are looking at. Now, as far as visibility of conversion, as I have already said, generally we always work on the when I say active pipelines, we look at least 50% conversions, and we are expecting the same by end of this year. Now, current revenue contribution from highway maintenances. Highway maintenances current contribution, one second. Let me just pull out the data. So as of March 26, we did about the maintenance contributed to the approximately 65%, and the specialized construction contributed to the 35%.
So the next question is: what is the current revenue contribution from
Yeah,
highway
I
maintenance?
answered that. I read that
Okay,
question
okay,
and
sir.
I answered it. Okay.
Thank you so much.
Yeah.
Anyone who wishes to ask questions may please click on the raise hand option. You may also post your text questions. So we'll take the next audio question from Himanshu Mali, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, you are Himanshu. Tell me.
Sir, so which clients has onboarded in the last quarter and any in the talks in the near future?
Sorry.
Which means which clients have been onboarded in the last quarter?
Okay. So as I said, generally, the infrastructure industry is, the assets are owned. It's a very limited fraternity. So Michelle, can you go to the client list? Just 1 or 2 slides back.
Sure, sir.
Yeah. Next. Next slide. Yeah. So Himanshu, if you look at generally what happens is there are asset owners, which I said that the funds or the sovereign funds, international funds, they are, they are acquiring the assets in India. So one fund will always have the multiple projects. So generally now today, whatever funds, all the funds which are operating in the country are on our client list. Now their projects might vary from year to year, but generally we keep working on with all the clients, because the maintenance comes once in a 5 year. Major maintenance will come once in a 5 years. Their order cycles will vary from a year to year. But I can tell you that all the funds which are listed in the first line are the funds or the InvITs. Second line, as I have said, that they are the corporations or the government agencies or the authorities which we are working with, and all other domestic or the asset owners spread across private owners. So this is how. So as far as acquisition of new clients is concerned, it is not a client per se, but it is generally a project.
And sir, my next question is like, what's your shareholding structure in Marcoline Infra, and what will be the shareholding structure after the merger?
Okay,
Your
so
shareholding.
we have similar structure wherein of the in the Markolines Infra also like payment, because we have other investors, friends and family members also who had invested in from the with us in that company. So by and large, our shareholding would remain same post merger.
Okay, okay, got it. Okay, sir, thank you. That's it.
Thank you.
Thank you. We'll take the next text question
Okay.
from, so we'll take the next text question now. And it's
Okay.
from Rahul Kumar, an individual investor. I'll read out the question once and for all. You may proceed with the answers. So, the contribution from specialized construction has increased from 25% to 35%. How do margins in this segment compare with the traditional highway maintenance business? And the second one is, as the company enters infrastructure development projects, what kind of margin should investors expect from this segment?
Okay. So as far as specialized construction, this thing is concerned, the orders are concerned. That was a very strategic decision that we had taken about 3 4 years back to enter into this segment, only with the intention to have an incremental bottom line, because those projects, the specialized construction and the niche skill set that required, and gives us definitely higher margin. And our aim when we started was also the same, to add at least increase our bottom line by 1% from where we were, and we are inching towards it slowly. Okay. Now, second question is, as the company enters
As the
infrastructure development.
company enters infrastructure development projects, what kind of margins should investors expect from this segment?
Okay. So, as a service provider, as I said, since we work very transparently with our clients, and I have already said in this presentation that our margins are generally, since we work on cost plus basis, our margins at bottom line are steady, and we can expect. But yes, now the growth is going to come from the volumes, not the percentage.
Thank you, sir. The next question is from Saurav Chaudhary from Raghunath Capital. And the question is, what is the current order pipeline which we are working on?
Okay. As far as our pipelines are concerned, since because of the competitive nature, I will not be in a position to share the client names or the project names. But I can tell you, as I've already said, in terms of major maintenances, we are working with few private funds, as well as the some corporations. And one of the corporation, we are at an L1 position on an 120 crore rupees contract. And other larger specialized construction contracts, I have already said that we are working on 300 to 500 crore rupees worth single project, and we are working on about 3 to 5 projects like that. That amount, that combinedly gives us an active pipeline of 2,000 crores.
Thank you. Before we take the next question, a reminder to all the participants that you may please click on the raise hand option to ask questions at this time. You may also type your text questions, post your text questions. We'll take the next question from Disha Shah, an individual investor. And the question is, what level of capex do you anticipate over the next few years to support the planned growth in revenue and profitability? The second one is, could you share an update on the proposed amalgamation of Markolines Infra Limited and the expected timeline for completion?
Okay, though I have answered both the questions, the generally capex, the investment into the capital assets is very subjective when it comes to maintenances, and because of the client's need, we have to keep churning on to the capital investments or the plants, so that we keep doing maybe not more than 10 crores, which we generally, as a policy, what we do is we have three set of machineries which is owned by us, so that we are ready for any kind of project and bidding. And otherwise, the machinery is always being rented locally, whatever is available cheaper at that location. So capex is very subjective. This And as far as mergers are concerned, as I said, that we have replied to all the queries, and we are expecting over, by and large, if we look at their NCLT and all other processes, generally it will take 6 months, and that is what. So we are definitely expecting by end of this financial year, we should be a merged entity.
Thank you, sir.
Yeah.
Participants who wishes to ask questions may please click on the raise hand option. You may also post your text questions. We'll take the next question from Pranay Shah from Caron Capital, and the question is, what EBITDA margins are we expecting going forward? And secondly, with rain expectations to be below normal level this year, does this impact our business and order flow and seasonality, or would be positive for taking up specialized construction?
Okay. I have already answered both the questions. I will just repeat them. As far as EBITDA is concerned, they could vary because of the nature and the requirement of client in terms of capex investment onto that project, which generally we pass on. And but since we work on a fixed bottom line, so our margins are pretty steady at a PAT level. Now, as far as the monsoon basically is definitely a.
I'm sorry, sir, you're not audible.
Sorry, can you hear me?
I can hear you now, sir. You're audible. Please proceed.
Okay. So, monsoon, we are expecting about 90% of an average monsoon this year, as per the IMD's announcement. So, yes, do they affect our business? They do. But with the experience, we have learned to keep the mix of our product mix, wherein we could work even through the monsoon in terms of either the maintenances or the specialized constructions. So by and large, as we are growing and with the experiences like tunnel projects, bridges, there will be still work going on. So yes, it affects the business, but not to that extent. But if you compare quarter on quarter, first two quarters will definitely have a lesser revenue because of the monsoons.
Thank you, sir. Participants who wishes to ask questions may please click on the raise hand option. You may also post your text questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the next question from Pranay Shah from Caron Capital, and the question is, what are we doing on school and sports segment?
Okay. So as we have been always looking at that, now with the current skill set, basically, if you look at highway, or we are into the infrastructure development, wherein the construction is the primary activity that we carry on. So we could always, that was the planning, one of the strategic plan in our growth plan, that we would leverage our skill set into other infra segments. So wherein we have got two orders, one is an open order from school, wherein development of their school infrastructure, that will include the school, some buildings, then the sports facilities, as well as all other amenities and requirements of the school. And as far as complex sports infra is concerned, we have got recently one order comprising of two smaller orders within the same thing, is the rehabilitation of the sports complex in Andhra Pradesh.
Thank you, sir. A reminder to all the participants, please click on the raise hand option to ask questions. You may also post your text questions. We will wait for a moment while the question queue assembles. As there are no further questions, I would now like to hand the conference over to Mr. Vijay Oswal, Founder and Chief Financial Officer, for closing comments. Thank you, and over to you, sir.
Thank you, Michelle. Okay, so here we are at the end of the presentation today. As let me just sum up quickly. As Markolines, we are, the largest service provider in terms of highway operation and maintenances. With the proposed merger, which we are expecting to be merged this year, we are also looking at a consolidation, more opportunities. With the increase in the eligibility criteria, we are also looking at high value projects, which definitely is going to give us a very good growth opportunity in near future, wherein we are expecting the growth with the in the leaps and bounds. And anyways, thank you very much. Thank you for all of you to be here to listen to what we do, how we do. In case if somebody has missed on to any questions, we will be really happy to answer any of the query or questions that you have. You can definitely write to us on our official IDs, which are published on the BSc website or even our websites, and we will try and reply to them. And thank you very much. Thank you all.
Thank you, members of the management. Ladies and gentlemen, on behalf of Markolines Pavement Technologies Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect. Thank you, sir.
Thank you. Thank you all.